Hey Alec, how you doing? You can hear me
Good.
all
How are
right?
you? Yep, I can hear you perfectly.
Doing incredible. I never know how I feel about the Twitter X music that they give us here. I sometimes just take it because it gives it to us, but
Yeah, it's never on for too long anyway.
no, not at all. We just got Dr. Murphy here. Let's invite him to speak. Hello, Dr. Murphy. You can hear us all right?
Yep,
Perfect. Thanks for joining us today. Excited
glad
for
to be
this one.
here.
Let's get Adam, our guest, on stage. He just requested, and there we go. Um, Adam's connecting, and let's just make sure that he can hear us all right and we can hear him. How you doing, Adam?
What's up, man? How are you, Jackson? I can hear you, and I heard the doctor as well.
Beautiful. Very, very happy to have you on, Adam. Thank you for joining us today. I'm doing great.
Good, good. Glad to hear it. No, excited to be here. Thanks for having me.
Beautiful. And we officially have everyone on stage, and we've got Timo and Daniel listening. And so it's also right on the dot, 12 p.m. Eastern. And so we will kick things off. The room will probably fill up, and there will be people that listen to the recording. So I'm going to give a brief intro to our event series, and then kick it over to our guest and let him introduce himself and Copper, and then we'll kind of dive into the conversation for today. So we have a weekly Twitter space, but we actually alternate topics every week between real-world asset tokenization and life insurance, two integral parts of our business here at Infineo. And so today you're on the real-world asset tokenization space, and we're hosting this one with Copper HQ. Copper is in the digital asset custody space and does just about everything and is very, very very robust in terms of their services and functionalities. And so we're really excited to have Adam here representing them and being our real expert in terms of sound custody. And so, yeah, with that, Adam, would you like to give a quick intro to yourself and potentially Copper as well?
Yeah, absolutely. Thanks, Jackson. Appreciate it. Thanks to Alec, Noah, Dr. Murphy. Appreciate you guys having me on today. Excited to be on the show. Appreciate the opportunity to be here and kind of excited to join a distinguished list of former guests. So I'll give a super high-level background on myself and then maybe go into a little bit more detailed kind of personal background and then a more detailed kind of run through on Copper as a firm. So I'm a combat Navy veteran, former fighter pilot instructor, ex-Wall Streeter, currently the co-head of sales for Americas at Copper, which is we're a digital asset infrastructure technology company. On a personal level, my first career was as a naval flight officer in EA-6B and EA-18G aircraft carrier-based electronic attack jets. I flew the EA-6B aircraft into combat in Iraq and Afghanistan. Easiest way to describe what a naval flight officer is sadly to make a Top Gun reference, so you'll have to forgive me, but from the original Top Gun, Goose, the character that was made famous by Anthony Edwards, is the naval flight officer that flies with Maverick. So within the kind of tactical air community, the NFO runs the communications, weapon systems, navigation, etc. from the backseat. So completed a couple of successful combat deployments in the Middle East, as I mentioned. Flew and commanded combat missions in Iraq and Afghanistan, transited in and out of the Persian Gulf through the Straits of Hormuz a number of times, despite some rhetoric and warnings from Iran not to do that. Our final deployment was a pretty cool one. It was an around-the-world deployment, so it included a transit of the Suez Canal. Came back to the States, was asked to transition from the EA-6B to the EA-18 Growler as an instructor. So at that time, the Growler is the Navy's brand new electronic attack jet. It's a specialized version of the two-seat FA-18 Super Hornet, so impossible to say no to an opportunity like that in a very sexy aircraft with all of the bells and whistles. So I completed that transition, stayed on as an instructor, taught new pilots and new flight officers how to fly and fight the aircraft. So very, very cool experience, kind of getting to share my wartime experience and knowledge with new aviators, and then kind of took new pilots of that aircraft to the aircraft carrier for their first carrier-based takeoffs and landings, which was both very cool and absolutely terrifying. And I guess I kind of joke that I effectively decided that, flying the world's most advanced carrier-based electronic attack jet, commanding combat missions, taking off and landing from aircraft carriers wasn't exciting enough. So I jumped ship and I left to pursue an MBA in finance. Made that transition from active duty into the reserves, landed a spot in what's I think widely considered to be kind of the preeminent Wall Street rotational program for folks transitioning out of military service that are interested in financial services. So had the chance there to rotate on the investment banking side and then on the market side within the prime brokerage space. To me, that was a really interesting one. That business caters to large institutional investors, think hedge funds, market makers, broker-dealers, which is kind of a fascinating space, both from like a product perspective and a client perspective. So I ended up with a seat on the prime brokerage desk, did a little over a half decade there. I think kind of a funny thing happened, right? So the clients that we catered to within that prime brokerage space on the traditional kind of equity side kept bringing up their interest in crypto and in digital assets. And it became, I think, abundantly clear to me that as those large institutional players, particularly the large traditional institutional players in the space, kind of continue to explore and continue to get into digital assets, that it was really something that was poised to take off and gain mass adoption. And that blockchain technology really was the driver and had this potential to change, the way that the financial system operates. You get the opportunity at a tier one financial institution to kind of look under the hood to a certain extent and see that there's a lot of opportunity for improvement. So I think blockchain provides that. So that's really kind of what led me to Copper. As I mentioned, I'm co-head of sales for the Americas region at Copper. So that includes Canada, the US, and all of Central and Latin America. To jump into what Copper is and does, I think high level for those maybe who aren't familiar with Copper, the tagline here is building the institutional standard for digital assets. So Copper is a digital asset infrastructure technology company. Our focus really is on helping institutional investors safely acquire, trade, settle, and store crypto assets. So the offering really includes a comprehensive suite of custody, clearance, and settlement solutions, provides a governance framework, it provides treasury and collateral management functionality and prime services, all of which I think we'll jump into at some point throughout the conversation today. So Copper, most awarded digital asset infrastructure provider in the UK. We've been named best digital asset custodian every year since 2019. I think the crux of the value prop of the offering is really this focus on reducing counterparty risk for our clients and bringing greater capital and operational efficiency into the digital asset markets. So we started late 2017, officially founded, I believe early 18. We've got about 500 plus institutional clients, really foundationally built on the idea of the custodial offering. But our flagship product over the past year and a half to 2 years is ClearLoop. So it's our off-exchange collateral management settlement solution. What that does is it enables clients to delegate funds and actually trade on and across multiple partner centralized exchanges without actually having to move assets on-chain to the exchange. So the settlements occur across our infrastructure, which enables fund managers and other folks playing in the space to mitigate exchange counterparty risk because you don't have to pre-fund the exchange with your assets, which is kind of the typical way of doing things in the digital world. What that does is a couple of things, right? It fosters greater capital efficiency. It enables managers to access liquidity across a number of different trading venues. You can do it securely, you can do it swiftly, and you get to do it all within the protections of what's known as an English law trust structure. So it's a bankruptcy and insolvency remote structure that really addresses the insolvency risk for ClearLoop participants. So that's, clients, exchanges, and Copper. I think, high level Copper focus really is around this idea of innovating change in the world of finance and building out kind of the most secure financial market infrastructure that we can for digital assets. So to a certain extent, it's bringing the best of TradFi to crypto and vice versa. So I think hopefully at a high level that kind of sets the stage for today.
I think that sets the stage incredibly, Adam. And I just want to say thank you for your service. Anyone here listening, I think I can say that on behalf of a bunch of us. So yeah, really thank you for putting your life at risk and everything you did. And honestly, before diving in a little bit deeper to the planned conversation, I honestly was really interested in how you said that being a naval flight officer wasn't exciting enough, and so you went Wall Street, and that led to crypto. And so I'm just curious, do you think being a naval flight officer in any way prepared you for the chaotic industry of digital assets and crypto custody? I mean, is there any overlap there, or is it really just you were looking for something different and looking for something exciting and ended up on Wall Street?
Yeah, I mean, I think there's a ton of transferable skill sets. You get to lead teams, you get to lead people. Obviously, in the military, that's kind of first and foremost is taking care of your sailors, taking care of your team. We get to do that. You know, you see that a bit on Wall Street. It's a bit more collaborative in the digital asset space, which I love. I like that aspect of, kind of the crypto world is it's very much a how do we build the ecosystem collectively? And I think that parallel to the military is very similar. There's this, cooperative goal to grow the pie collectively. And in the military, it's very much, that type of mindset working together across service, across branch, across, different countries. So you have a similar kind of ethos broadly, which, maybe on the surface doesn't seem apparent, but absolutely exists.
100%. And I definitely see that. I was honestly just curious for your take. So thank you for being open to sharing. And so for our listeners, we're going to dive right into our conversation here. As you hinted at, Copper officially founded early 2018, and you guys have been rapidly evolving since then. I'd love to hear a little bit about how your multi-party computation custody solution has really changed the landscape of digital asset security in terms of its significance for both institutional and retail investors. And so if you could potentially speak to the MPC, that would be great.
Yeah, absolutely. I mean, at a high level, custody hasn't, I don't think, fundamentally changed in centuries, right? At its core, the responsibility of a custodian is to safekeep and safeguard assets. So in the digital world, that tends to be the creation and generation and storing of public addresses, private keys, which are essentially the bearer asset. What you have to keep in mind, I think, is that in crypto, it's a unique asset class. They're very unique assets in and of themselves, right? I can't think of another asset class in the world that has the potential of 100% of the principal being at risk every time you transact in it if it's not handled properly. So what we've seen in the digital asset custody space, which has evolved over the past 15 years or so, it kind of moved from this evolution of HSM or hardware security modules. So think a USB drive. That moved to kind of multi-sig, and then from multi-sig, we've kind of graduated to MPC technology. So to walk through that evolution a little bit, with an HSM, you essentially have the entire private key in a single location. It's very clunky. It's very slow. It's a very inefficient way of transacting. I think most service providers will quote SLAs up to 24 to 48 hours for movements. So for sophisticated trading firms, that's an eternity. You saw this evolution then to multi-sig, which is a bit of an improvement in theory. The wallets within multi-sig look a little bit more like, I liken it to a lock that requires essentially multiple keys to open. The problem is if one of those keys gets compromised, the entire system can ultimately be compromised. So in contrast to that, the next logical evolution is the use of multi-party computation, or MPC technology, which is going to use advanced cryptographic algorithms in order to help secure the digital assets. So they distribute, the computation of these cryptographic functions across the network, and that ensures that essentially the private keys are never shared. So it makes them incredibly secure, even in the face of a network attack. So at MPC, you can think of those key shards essentially as, autonomous pieces of code. Each one of them holds partial information with the client's account details on it. And those key shards are what are used to actually sign and approve and validate transactions across the blockchain. So when it comes to ensuring kind of the safety of investments and protecting assets against breaches, MPC is certainly far superior and is really the kind of clear choice. Copper takes it, I think, a step further, and our architecture is a little bit unique in that it's built upon this idea of geographically dispersed MPC technology to create those three distinct key shards. So what that means is that no private key is ever centrally created. It's never reassembled for signing. Each of those private keys is really kind of created and stored as three separate shards. So they're held in three separate locations by three different parties. So you have this idea of being device diverse. So there's really no centralized risk because a private key is never held in one location. And what we see across the institutional client base, which is, wholly our focus, those institutional clients are going to require the protections and safekeeping of a centralized custodian like Copper, whose ethos is really dedicated to securing assets, providing governance to, really kind of assure investors and various stakeholders that the investments are safe. And that's effectively the role that Copper plays using MPC technology to safely and securely store assets. So there's a couple of reasons with that as context, I think, on why these folks at the institutional level want to and need to use a custodian. Some of it's regulatory. A lot of it is, reduction of risk and complication, right? The digital asset market infrastructure is pretty dramatically different than it is in the traditional space. I don't have a NYSE account. I don't have a NASDAQ account. I have a broker that handles movements of assets in the digital space. A lot of times your exchange is also your custodian. I think we'll see a shift away from that, but the idea of using a centralized custodian helps to reduce risk and complication. It provides, increased safety and security. Custodians in the digital space do operate in similar fashion to traditional financial markets in that their primary role is the responsibility and safekeeping of those assets. The other reason that centralized custodian provides a lot of value for these types of investors is the recourse for them in the event that something does go wrong. So you have insurance protections, you have governance frameworks built into the platform, you have permissioning, you have report auditing, you have considerations, you have a bunch of different things to consider there. And then, of course, just being safer than exchanges in general, right? The idea of an exchange taking custody of assets when really their primary role is and should be trading venue and liquidity provider. So it's become clear that, exchanges are not immune to security failures. Custody is not their primary focus. So you want to leverage the services of a dedicated custodian who can provide that safe storage usage for digital assets. Did we lose you, Jackson?
Sounds like we might have lost Jackson, but that's okay. So no, Adam, appreciate that explanation. Sort of to pivot a little bit here, I'd love to get into some of the work you guys are doing in the securities realm, specifically with RWAs and the custody of those. So some of the bigger news was the acquisition of Securrency and your relationship with BitGo and launching Copper Securities in the UAE. So I'd love to hear about kind of the focus you guys are putting on securities and if that.
Oh my God. Notorious Twitter Spaces loves to quit on us. Sorry, guys. Let's get everyone back on stage here. Adam, can you hear me?
I sure can.
Oh my God. I appreciate that.
All good, Jen. All good.
I was moving into our next question when Alex said he couldn't hear me, and next thing I knew, our space was over. So let's make sure everyone is up here all right. Alec, can you hear me? Sorry, Alec. I thought you were connected before. Okay. And Alec, are you all right here? I'm going to post a tweet under our last space saying technical difficulties.
Yeah, I just quote tweeted the new space and pinned it.
Beautiful. Thank you, Noah. Okay. Dr. Murphy's back in here. And on stage, we were flowing. So let's see who picks back up with us here. Thank you for the retweet. Thank you for the tweet, Dr. Murphy. And yeah, with that, I think people will start to pile in here. Potentially, just because this will be a separate recording, we don't need to go through the whole spiel about what series this is. If you're here, this is the real world asset tokenization space. We're holding this with Copper here, and we dealt with some technical difficulties. There is another recording where you can listen to the first 15 minutes of the conversation. But just for anyone that may listen to this recording instead, Adam, I think it could be great if you just give a very short introduction to yourself and just Copper, so people have context in case they're jumping in blind here.
Yeah, absolutely. So, ex-Wall Streeter, currently co-head of sales for Americas at Copper. Copper is a digital asset infrastructure technology company. That's really the focus and core of what we do. So it's helping institutional investors, do different things like acquire, trade, settle, and store crypto assets. We're really trying to build the institutional standard for digital assets. So that includes providing essentially a suite of custody services, governance framework, clearance and settlement solutions, treasury, collateral management functionality, prime services, and probably the industry-leading off-exchange settlement network, which is called ClearLoop. So happy to dive into any more of that with you guys.
Perfect. And we had just covered, in case anyone's interested, kind of the origin of Copper and how they were revolutionizing the digital asset custody space with their multi-party computation custody solution, and how that compares to multi-sig wallets or multi-sig custody and other custody solutions. And so with that, I think it would be great to hear a little bit more about your flagship product, ClearLoop, and how it's pioneering off-exchange settlement. And if you could dive into the creation of that, that would be great, Adam.
Yeah, absolutely, Jackson. The ClearLoop product is pretty special. As you mentioned, it's certainly the flagship product. It's really kind of a one of one, I think, in the marketplace. So it's our market leading off exchange collateral management and settlement solution. What it enables is clients can delegate funds and trade on multiple partner exchanges without actually having to move assets on chain to the exchange. So the settlements occur on the Copper infrastructure. That enables managers to mitigate exchange counterparty risk because you don't have to pre-fund the exchange with assets. Those assets remain in custody at Copper while you're getting this delegated balance to trade on the centralized exchange. So what that does is a couple of different things. It fosters greater capital efficiency. It enables fund managers and trading teams to access liquidity across a number of different trading venues. You can do it swiftly. You can do it securely. And it's all protected within the confines of a robust insolvency and bankruptcy remote English law trust structure that's designed to address essentially the insolvency risk of all of the ClearLoop participants. That product has grown. The exchange integrations, we've got 8 that are live across the platform now. So that includes major venues like Deribit, OKX, Gate, and Bybit. We've got some additional exchanges that are currently in the process of integrating. We've got go live dates for those by the end of Q2. I think Bitstamp is the next one to officially launch. So we're excited to have those guys join the lineup in short order. And then we kind of took things a step further and we designed this ClearLoop transparency dashboard as well. So what that does is provide our clients, as well as the exchanges, a real-time view of assets, including the exchange collateral. And I'll talk a little bit about that maybe in a second. That's held within that bankruptcy remote ClearLoop trust structure alongside auditable blockchain addresses. So the dashboard provides the detailed data that focuses on things like settlement cycles, margin calls, et cetera. You can really oversee essentially, live collateral, live settlement across the ClearLoop network via that risk dashboard. You can monitor total reserves of the exchange's collateral accounts. You can monitor your exposure. You can review the exchange's settlement cycle history. You can track things like API connection failures, margin calls, exchange response times, et cetera. So it's incredibly transparent, which is kind of the name of the game. Clients delegate into ClearLoop and into the trust structure effectively via an API call. So it's sub 100 milliseconds. You get that digital representation of funds available on your exchange account, and then clients can trade regular way on that exchange account. So we do require clients to have a direct relationship with the exchanges, to have their own exchange accounts, as well as a Copper account to facilitate this. So it isn't sponsored access or direct market access DMA. I think it's a much more sophisticated setup than just kind of trading on another firm's account. And as we mentioned, it solves for a couple of things, right? Exchange counterparty, insolvency risk. It solves for some of those capital inefficiencies of actually paying gas fees and putting up with blockchain delays when you're moving assets to and from an exchange. solves for those operational inefficiencies, and some of that administrative burden is relieved for our clients, which is hugely helpful. So you're actually delegating assets to an exchange, you're trading with that virtual balance, and then the P&L is actually settled off-chain, within predefined settlement windows. So what we refer to as that initial margin or that delegated balance never actually leaves secure custody. It remains locked at Copper. The only piece of the transaction that would move at a blockchain level is any sort of realized P&L, once you've closed a position and undelegated. So if it were Infineo to, delegate 100 Bitcoin to Deribit, let's say, tie it up in some options positions, realize a 2 Bitcoin profit, and then undelegate that, 102 Bitcoin, the only piece that actually moves at a blockchain level is the 2 Bitcoin from exchange account to Infineo account. So it's, as I mentioned, incredibly capital efficient for firms to not be throwing assets back and forth across the blockchain, which is nice. The other piece that probably warrants diving into just a little bit, because we get a number of questions, the English law trust structure is one that is designed, essentially the clients that are delegating into that and the exchanges that are on the other side posting collateral into that are the trust beneficiaries. So that collateral is monitored 24/7 by Copper's financial risk team. It provides clients and exchanges protection, of course, against a Copper insolvency and custodial counterparty risk. And then the collateral agreements that we have in place provide protections to the clients against an exchange insolvency, and then on the flip side of that, for the exchanges against a client insolvency. So essentially all of the parties are protected. And I think it's important to note that those exchanges actually have skin in the game, right? Because they're then posting collateral plus a buffer into the trust structure as well, based on the P&L movements of the assets that have been delegated to them. So that's required to be posted into the trust as well. So all of the parties have protections. They all have comfort that all settlement obligations will be met. So it's an exceedingly robust setup from both, I think, a technical and a legal perspective. And I think that's what makes it such a powerful offering.
Beautiful. I agree. And the power there for institutional investors is incredible. And I just want to make sure I'm not missing anything. Is there any sort of use case for Clearloop for retail right now, or is it more geared towards institutional investors only?
Yeah, sadly, not at present. It's a purely institutional focused product at this point. Copper, in general, is a fully institutional custodial setup at the moment.
Beautiful. No, just wanted to provide some clarity there. Appreciate that, Adam. And so let's move on to the growth of Copper, because the products you guys are coming up with and the functionalities you're able to provide are truly remarkable. And so I'd love to hear how we've seen companies begin to engage. I mean, you have, I believe it was 7 or 8 exchange integrations to date, and that seems like it's growing pretty fast. So how has the Copper network grown since its founding in 2018? And if you could discuss the development and importance of your network as kind of a custodian agnostic, scalable, and private asset settlement network.
Yeah, you bet. The exchange integrations across Clearloop were at live 8 exchanges with a couple in integration. On the kind of general exchange connectivity piece, I think it's 40 plus exchanges that clients have access to across the platform, and you can build that connectivity into the platform as it stands. So you can see all of your exchange balances, all of your exchange holdings. You can kind of move between accounts, so you eliminate kind of that hub and spoke setup. So the Copper network formerly is our robust settlement network that allows for effectively instant off-chain DVP, or delivery versus payment, or we refer to it as payment versus payment settlement between trading accounts for counterparties that exist within the Copper ecosystem. So what that means is Copper clients can settle amongst each other, or they can settle with counterparties that are outside of the Copper ecosystem, which is pretty slick. Those assets move, as I mentioned, in kind of a payment versus payment setup. So what that does is it limits the counterparty risk, and you're not going to see an asset move until it's confirmed by both counterparties. So both sides are attesting to the trade details before assets move. So that's a little bit in contrast to the more traditional digital asset kind of free of payment movement for settlements like, some of the competitors in the space do. We certainly offer the free payment functionality as well, but the massive differentiator between Copper and other folks is that we actually don't charge for those movements. So there's no cost associated with withdrawals, transfers, deposits, etc. That DVP or PVP movement is pretty slick when you move it from trading account to trading account, because those settlements can actually be done via kind of an instantaneous Copper ledger to ledger movement. So that means they're off chain. There's no key shard signing required. You're not subject to blockchain gas fees or delays. So it's incredibly operationally efficient for clients. So the idea behind Copper Network just in general is this combination of what I think your best of TradFi principles married up with, kind of the best of blockchain efficiencies. The idea is to create kind of a seamless post-trade experience ultimately for clients. So across the network, participants have, this unified real-time view of all of the settlement activities that they're doing. It effectively streamlines that trade life cycle from, the initial receipt of instructions all the way to the final movement of the assets. It includes, as I mentioned, right, that free of payment. You can do payment versus payment. You can do one-way transfers, requests for transfers. So what that essentially looks like for folks on the platform and then part of the Copper Network is each one of those participants will get a unique shareable handle that they can then, use to establish the secure post-trade connections across Copper's infrastructure. So what it does is, as I mentioned, kind of centralize that entire settlement life cycle, which, as you can imagine, back and middle office ops teams absolutely love. You can connect with, I think it's 600 or more institutional counterparties, and then you can actually request to publicly display, your participation within the Copper Network, which enhances market visibility. It opens up, the opportunity for our clients to interact with, new and different trading partners that they otherwise wouldn't have the opportunity to interact with. So it's more than just a settlement network. I think it really provides this seamless kind of post-trade experience that's kind of borrowing from the best of TradFi and the best of blockchain.
Beautiful. And if any of our other panelists have any follow-up questions, feel free to chime in here. But if not, I'll ask my own. Noah, if you have one, I'll let you ask.
Yeah, Adam, going on the growth of Copper, with all the, different on-chain assets that are, coming into the world these days, I was wondering if you guys had any plans to, look into holding treasuries on-chain or in the future, credits or, real estate or whatever the crypto blockchain world might bring in the future.
Yeah, absolutely. So there's probably a good segue into what we're doing probably more globally and specifically in the UAE and in Abu Dhabi with Copper Securities. So we've seen this, we're very much a global firm in nature. We've got, our international headquarters is the blockchain house in Soho in London. We've got the team here domestically in the Americas. We've got the team in Singapore with an office in Switzerland and in Abu Dhabi as well. On the kind of RWA, real world asset tokenization side of things, those expansion efforts for Copper have really been facilitated based on an acquisition that we made in late 2023. So we acquired Securrency Capital Limited, which is a Abu Dhabi-based division of Securrency. So it's essentially the tokenization platform and the registered and regulated broker-dealer entity of Securrency Inc. So basically, DTCC came in and bought up part of Securrency, and Copper bought up the other component of it. So what we have now based in Abu Dhabi is it's a full-service, regulated blockchain-enabled brokerage firm that's able to offer digital securities trading. So it's a nice step into really marrying the blockchain and the traditional finance world. So the licensing that we have enables us to trade and custody any equity or fixed income security and kind of almost literally bridge the traditional and digital asset world. So where I think things get really exciting is, at a high level, a Copper client could hold some sort of a yielding security. So to your point, whether it's a money market fund or a treasury, you could hold that via Copper Securities, which is, as I mentioned, that regulated broker-dealer. We can then use the tokenization platform to tokenize and create a yielding token. You can then pledge that tokenized representation to, one of the partner crypto exchanges. The exchange gives clients a credit line appropriate to the collateral that gets pledged. And then we can use, as we just discussed, kind of the Copper Network and our settlement rails to facilitate, 24/7, 365 movement. So there's a lot that, both the traditional players and the crypto native clients can do off of the back of that. So, needless to say, that's something that will continue to grow out, that functionality in 2024, but we're very excited to continue to grow that portion of the business. I think, stay tuned because there's a lot more to come there.
Hey, Adam, I got a real quick, easy question for you to answer, but I know I brought this up in the planning stage for this, but it might help some listeners. Can you just clarify? One might have thought, are you guys called copper because at some point you had like tokenized copper deposits that were on chain. Can you just explain what the term copper means?
Yeah, it's a good question. We get it somewhat regularly. I think when founding Copper, they looked at a couple of different names. I think what they decided on the reason for Copper was, you're really the infrastructure provider. You're core and central to the bones and the structure of whatever institution you're providing your services to. So as a custodian, you tend to be, one of the first calls that new funds reach out to and establish, because they recognize the importance of doing it right and working with, the best in the space. So it's really about being kind of it's not the sexy work, right? It's the plumbing, it's the piping, hence Copper as the name. So, not a tokenized Copper platform. Not to say that we won't get there at some point, but that's the kind of genesis of the name.
So, Adam, I guess sorry, Jackson. So, really quick, Adam, just to kind of bring it back to something you said earlier. So, you mentioned that that Copper recently acquired Securrency, which is an Abu Dhabi-based infrastructure play. Is that where a lot of the digital asset and real world asset stuff that you guys are working on taking place? Like, is there a lot going on in the UAE, or why did you guys decide to put some focus behind there? Because it seems like you guys are also launching some other really big things within the securities world in the UAE and in Dubai specifically.
Yeah, I think the impetus there was Securrency was already based out of Abu Dhabi. So that was just kind of a logical extension. That was something that was interesting to us. The idea of having that regulated broker-dealer entity combined with the tokenization piece kind of all in one made a lot of sense based on kind of the aspirations that we had. I think you're seeing that part of the world being very progressive in terms of digital assets as well. So there's a significant amount going on in the Middle East in terms of the digital asset ecosystem. They've been very... I think they've been very progressive in terms of the way that they've approached it from a regulatory perspective, in terms of encouraging innovation. So we're excited to partner in that region for sure, based on the way that it's been received.
And on that note, Adam, it's actually a really interesting story, in my opinion, the acquisition of Securrency, or really a portion of Securrency by Copper, because I and Alec and Noah, I think, have been familiar with Securrency for a while. They've been in the blockchain space, and that name's been popping up. But really, the biggest news with Securrency was that they were acquired by the DTCC. And so when we had learned that they were actually partially acquired by Copper too, it was just kind of an interesting story. And so when we got that story from you on our call beforehand, I thought that was some great context just on like why you guys actually made the play. And so if you could give any historical context on kind of like the Securrency acquisition, I think that would be great. And who Securrency really is and were a little bit before the acquisitions, that would be great.
Yeah, I think the focus for those guys really was the tokenization platform, and coming up with and having the setup of a truly regulated kind of broker-dealer entity in place. The setup across DTCC and the purchase there, and then the separate Copper acquisition, I think speaks to I think the progressive nature of the way that DTCC is actually looking at the ecosystem and the environment. I think it's a very positive sign for digital assets in general, that they made a similar acquisition for the rest of essentially Securrency Inc. So the specific entity that was purchased by Copper was Securrency Capital Limited. And then Security Inc. was what was purchased by DTCC. So I think a great sign for the industry at large that you have these, very traditional, long-standing firms making plays to kind of modernize their technology and their infrastructure in the space, because I think they see the writing on the wall in terms of where this is ultimately all headed. So I think a great sign for the industry in general.
It's definitely a great sign for the industry, and there's only more things to come. We've hit on a lot of our main topics here, but I would really like to talk a little bit more about your global expansion plans beyond Abu Dhabi. Potentially, this may be out of your realm. I know that you typically speak to things more in the States, but if you could speak to any sort of global expansion plans beyond the Abu Dhabi plans we had just talked about.
Yeah, there's a couple of different things that I think are high on our list for 2024 that we're collectively very excited about. We took, I think, a very important step in the marketplace late last year, specifically in regards to our ClearLoop offering. So, as we discussed earlier, it's widely considered the standard for off-exchange settlement. The big announcement that we made towards the end of last year was this push to make ClearLoop multi-custodial. So what that means is that we've actually partnered with other digital asset custodians, including BitGo, Zodia, Kamenu, to enable this idea of a multi-custodial ClearLoop model for the institutional digital asset space. So what it effectively does is it brings the digital asset custody ecosystem closer together. What that connectivity will enable is for BitGo, Zodia, and Kamenu clients who are custodying assets with those respective custodians, they will have the ability to trade via our ClearLoop and create essentially kind of a market-first partnership, and essentially sets the stage for this kind of new era for off-exchange settlement. So, there's a lot of different reasons why you would go with a various or a different custodial provider. So nice to be able to leverage that ClearLoop connectivity, provide that exchange counterparty risk mitigation tool to other folks, other custodians in the space, because that's the big feedback is that, anybody trying to do anything similar to ClearLoop realizes how complex and challenging it is. So being able to provide this connectivity is huge, right? I think what you're seeing essentially is it's this maturing of the markets in general. So it's, providing fund managers, institutional clients with this custodian agnostic approach to mitigating exchange counterparty risk. So it's a general maturity of the market space, in general. We're, certainly proud to partner with those guys. I think it grows the institutional market participation. Ultimately, it helps to de-risk trading markets. And it's the clients and the market participants that ultimately benefit from it, right? So, the partnership enables those institutional investors, managers, et cetera, to access greater liquidity and to do it in a more agnostic approach from a custodial perspective than they have in the past. So, and you get to do it within a risk mitigated environment. So that move to kind of globalize and make ClearLoop a bit more multi-custodial is certainly a big one. We mentioned the efforts in ADGM with Copper Securities. That's huge for us. One of the other things that we've done is we've launched officially an agency lending desk, which enables clients to borrow and lend within the Copper ecosystem and then within ClearLoop. So we've executed and facilitated a couple of these transactions to date. There's, I think, an official launch later this month now that we're into April. But it's pretty slick. It gives clients the ability to extend, borrowed funds directly into ClearLoop. So you have them within this, kind of closed ecosystem. So assets are never leaving our secure infrastructure. You reduce that bad actor risk for the lenders. We have a pretty strategic position in that we've got 400 or 500 institutional clients, so we're providing a pretty significant kind of supply and demand for lending. We have folks on both sides of the aisle, so that's an interesting aspect of it, right? That strategic positioning is important because you have this diverse level of client relationships that we have across the platform based on our existing product lines. So now what it enables us to do is kind of match that lending and borrowing need across the client base, because you have folks with a lot of assets that want to lend and earn some yield, and you have a lot of folks that are clamoring for borrow. So you have folks on both sides, which is super helpful. From a lender perspective, those guys benefit because they can earn yields on assets that might otherwise be sitting idle, we can manage all the operational tasks and the risk management. The borrowers get direct access to a stable inventory from other institutional clients, helps simplify the borrowing process. So that'll be a big focus for us in 2024 as well.
Adam, I was with Copper being as international as you guys are, I was really curious about what which regulations you face. If you have to offer different services in different countries. And lastly, I guess if you guys saw a big inflow post Bitcoin ETF in the United States, or if your clients were mostly already in the space to begin with.
Yeah, good question. So we're part of an SRO, or self-regulatory organization out of Switzerland. So all of our clients face off with our Swiss entity. FINMA there handles all of the AML, KYC, compliance due diligence requirements, and they're pretty robust. So all of the clients that we face off will go through a very rigorous kind of compliance onboarding process. We do look, of course, internationally, different regulations based on location to make sure that we're, keeping both ourselves and our clients on the right side of the reg setup. So depending on setup of the client, we'll look at the local regulations. We'll look at, where those clients have their principal place of business set up, and then we have to tailor the offering to a certain extent. So if you're for example, if you're a full U.S. domestic client, Clearloop is off the table, because all of the exchanges on Clearloop are offshore exchanges that require an offshore structure to face off with. So, there are limits sometimes to the Copper offering just based on jurisdiction. So we have a very robust matrix that we are kind of constantly evaluating and looking at to make sure that everything that we're offering is keeping everybody happily, is keeping everyone happy globally. So it's definitely something that we're very cognizant of.
Cool. That makes a lot of sense. And then my follow-up was, I guess, did you see a big inflow of new customers post Bitcoin ETF? Or do you think that it was kind of already, I guess pressed is the wrong term, but the people you work with were already in the space to begin with, and the ETF wasn't a big boost for you guys?
Yeah, I think it was. I think obviously the price impact has been notable. So that's certainly helpful, especially in a business where, you're charging potentially bips on assets. We've seen a steady uptick since, I want to say November, December of last year was when we really started to notice, the markets feeling like they were changing. So I think a lot of that, rode on the shoulders of the ETF approval, and ultimately the setup there. So, most of the clients are holding the underlying asset. I think the ETF does a number of things, including, it provides the ability to interact in a very kind of regulated and familiar way for folks. So you've seen a lot of folks pile into the space, but we saw that, I think, kick off a few months prior to the actual, kind of official sign off on it. So it's been a gradual buildup for sure. It wasn't a Tuesday, Wednesday, big change day over day. It's been a gradual kind of shift since Q4 of last year.
Thank you for that. And I guess one question I forgot to ask earlier that I'm just really interested in, Adam, is amongst all, or within Clearloop specifically and all these other products, what chains are you guys interacting with? Is it one specific chain? If so, which? Or is it chain agnostic? And I'd love to hear you speak to which blockchains you guys are working with.
Yeah, I think we're at present, it's like 60 plus layer ones that we provide custodial services for. And then if we provide foundational kind of layer one custody for the blockchain itself, we can also enable what we refer to as like layer two support as well. So anything that's being built on those layer ones, we can essentially batch add tokens to that as well. So if it's ERC20s, we can add to the platform. If it's anything that we have that L2 connectivity and build in across the platform, we can add those tokens with relative ease, which is a good thing. So 60 plus layer ones right now, I think it's It's an ungodly number of tokens overall. And we take that feedback on a regular basis from clients, and we add to that token list, I would say, on a daily basis. We take feedback from folks based on requests for support. We're constantly adding new chains. So we've got some exciting builds that we're currently working on that should be announced in short order as well. So that's one thing that the team works very, very hard at, is making sure we're kind of in front of the latest and greatest new projects and making sure that we're kind of first to market with some of the custodial setups for those guys, because it's a huge first mover advantage for us, without a doubt.
Yeah, and a quick follow-up to that, I'm just curious, do you know if you guys work with Cosmos in potentially Cosmos IBC chains? I'm just curious, as that's what we're working with at Infineo right now, and could potentially be really interesting to work together down the road.
Yeah, absolutely. Cosmos definitely covered from a blockchain perspective. So we've certainly got that piece covered, and I think it may actually be supported in terms of an L2 asset as well. So we've got Cosmos covered. So let's have some conversations on that front.
Of course, Adam. We'll definitely take that offline. Is there one chain that stands out, like is the favorite amongst institutional investors right now? I feel like that would be interesting insight to potentially share with our listeners if possible.
Yeah, I think the preponderance of the holdings are going to be Bitcoin, Ethereum, if you look at it by market cap and by exposure across the client base. So I don't think any surprise there. We announced over the summer and into the fall an integration with Stacks, which is effectively an L2 building on top of Bitcoin. The Stacks guys are doing some really interesting stuff in the space. So that's one I'm keen on, kind of personally, know the team there and help facilitate some of the growth and then the connectivity with Copper. So that's one in particular that stands out for sure.
Beautiful. And we're coming up on time here, so I think I've got time for another question or two here. But I've been so impressed this entire conversation, Adam. Really, what you guys are doing at Copper is incredibly revolutionary and going to play a role in all of digital asset infrastructure in the coming years. And so I can't wait to see what Copper is able to do. But I would love to hear a little bit about like kind of your executive and founding team and how they continue to stay at the forefront of this ever-changing industry.
Yeah, I think having that builder mentality is instrumental, and it's really ingrained in kind of our DNA. There was a really good Bloomberg article, I think last week actually, that came out and highlighted our CEO Dimitri. So just for context, when we started in late 2017, if I have my story straight, Dimitri was a CTO for an asset manager, was tasked with setting up a crypto long only fund, built out the structure in the regular way that you would expect from a fund manager side of things, but then went to the marketplace to try to find a custodian and a prime broker, and realized that there really wasn't anybody of quality in the marketplace to do that. So he realized, I think, very early on that there was this massive market need for kind of a dedicated digital asset custody offering, and there were some areas in the space that needed some improvement in terms of siloing, et cetera. So I think it was kind of one of those, necessity is the mother of invention moments. The team has very much been built kind of collectively across crypto native and traditional finance. So the traditional finance background of our team expands across, I think, all of the tier one financial institutions. So we've got, former traders, CTOs, CIOs, fund managers, heads of global equities, et cetera. We have a prime services team with decades of combined traditional equities experience within the equities PB space. It's a team that, had previously basically built from the ground up the traditional equities offering. So very well positioned to do something similar in the digital space. I think we're a little bit unique in terms of, the focus for us is really on risk management. It's really on risk mitigation. The old saying is that everyone's a risk manager at Copper. I think that's certainly the case, but we take it a step further. We run a dedicated risk management team. They all have noteworthy TradFi backgrounds on the risk and compliance side. I think when you add to that a 24/7, 365 white glove level of service across the account management, the client service group, the relationship management teams that we have a product and engineering team that makes up, I think, over a third of our workforce. Lord Philip Hammonds, our chairman, so former Chancellor of the Exchequer and Secretary of State for Defense. I think across the board, we really have teams built from a combination of TradFi and crypto native experience. So we kind of bring the best of both worlds together to do that and hopefully bring, kind of the next wave of market infrastructure to the ecosystem.
Well, I think that Dimitri was spot on and dove in at a great time. And I mean, I think that we can see that from Copper's success. And so I'm really excited to keep up with how you guys evolve over the coming years with the industry and how you're able to stay at the forefront, and hopefully how we can work together on Sound Token, on any of our digital asset products. And so, Adam, I think that this has been a really incredible conversation, and we've covered all of our topics. And so I think that we can begin to wrap things up. If you would like to tell the listeners a little bit about where they can stay involved with Copper, if they want to stay up to date with the news, or if there's anything coming up you want to share within your community, it'd be great to share that with the listeners.
Yeah, absolutely. If folks want to reach out directly to me, LinkedIn is great. Telegram's at Adam VandenBoogaard, two O's, two A's in the last name. Emails adam.vandenboogaard@copper.co, or on X at avbvandy. The other thing I recommend, we've recently started putting out within the past couple of months a weekly report that our research team puts out. The feedback's been very, very positive. It's kind of a concise but comprehensive overview of latest data trends, various analyses, all across, emerging trends within the digital asset ecosystem. So that's an exciting one. You can go to copper.co/insights/research and get that delivered directly to your inbox. You can access it on LinkedIn as well. So it's called The Opening Bell. So it's a great report. I recommend anybody kind of follow that on a weekly basis.
And I'm grabbing that link for you right now. So if anyone in the audience is interested in signing up and listening and reading the Copper Research Weekly, you can do that at the pinned tweet. I'm putting it there right now. You guys should see that. And so with that, I want to just, again, Adam, seriously, you've probably been one of my favorite guests, if not my favorite guest to host. This has been really incredible having you on and getting to hear about you and how Copper is really revolutionizing the digital asset custody space. I again want to thank you for your service. And yeah, if anyone is joining us late here and missed the beginning of the conversation, we ran into some technical difficulties, but if you do want to find that space, I'll make sure and put that under this one. It's about 15 minutes. And on this one, we went the majority, the 45. And so with that, I want to invite all of you guys listening to come and join us next weekend for our next Twitter space. This one's going to be on cash management with whole life insurance. And then the following week, we're going to have Relio on. We're going to be reviewing the tokenized real estate revolution. So we highly encourage you to come out to either one of or both of the events. So yeah, with that, I think it's been great. Dr. Murphy, Noah, or Alec, any last thoughts before we conclude here?
No, Adam, you were awesome. Thanks again for joining.
Yeah, really appreciate it. Thanks, Adam.
Thanks for having me, guys. I appreciate it.
Yep. Thanks for doing it.
Thanks, Adam. Have a good one.